Hi, everyone. This is Jennifer Berry with Coldwell Banker Sacramento Sierra Oaks. I am here today with a new installment of Quarantine Top 3. And today I am talking with Antonio Lopez. Antonio is a mortgage loan officer extraordinaire with Movement Mortgage. They just moved to some really cool new digs over on Howe. It's great space. You guys should go check it out. And Antonio is going to be sharing with us today the top 3 ways to get prepared for home ownership.
Yes. Yeah.
So
Thank you for
take it
having me,
away,
Jennifer.
Antonio. And if I have any questions, I'll just jump in.
Perfect. Perfect. Yeah. So thank you for the intro. I've been doing loans here in Sacramento, born and raised here in Sacramento for about 15 years. So I'm with Movement Mortgage. We're set up as a private mortgage bank. And today I just kind of wanted to give everyone a lay of the land when it comes to financing and, if we're still lending money, still in business. And I want to assure everyone that we are absolutely into lending money. I think we were all hit about 2 months ago with a big surprise, and things definitely impacted lending initially, and things were tightened up. But we have certainly seen that open up since then, and we are absolutely lending money both for purchase and refinance on residential real estate. So that's anything from a condominium, townhome, or single family home up to 4 units. So that's kind of our specialty and our niche. So really, we're definitely lending money. And right now, when we look at all the different loan programs out there, they really can be boiled into one of 2 categories. It's either a government loan or a conventional loan. So on the government side, we've got FHA, VA, and USDA. And then conventional, we have Fannie Mae and Freddie Mac. And so a lot of people aren't familiar with the USDA loan. And the reason I brought that up is we are a direct lender for it, and it offers a no down payment option. You'd have to buy in a more rural area, but areas like Galt, Lincoln, Placerville, some of these outskirt towns would qualify for that. So that's something to keep in mind if you're open to buying a home, maybe not have a whole lot of money saved, but are open to buying in one of those areas. VA helps our veterans out. And then, of course, FHA is a government loan sponsored by the Federal Housing Administration, and it's a great program for a lot of first-time home buyers. So, and although you don't have to be a first-time home buyer to take advantage of it, it offers a little bit more leniency when it comes to credit score and down payment amount. And then when it comes to conventional loans, Fannie Mae and Freddie Mac, pretty straightforward. Minimum down payment for those is 3%. And there's some really cool programs we can layer in with those. But really, part of the reason that I wanted to chat with you today is just to cover those 3 things that I think we can all work on to get prepared to purchase or refinance, because you want to basically put your best foot forward when you're presenting your loan package to a loan officer and ultimately the underwriter who makes the decision on your loan. So those 3 things that we evaluate from a loan standpoint is going to be your cash, your credit, and your income. So I want to cover a few different things on each of those categories so that you're best prepared to start with the house hunt.
Okay.
So first, when we talk about cash, this is going to be money that's going to be required for down payment and closing costs. So when it comes to cash, we can use a couple different assets. Obviously, checking, savings account, money that you have liquid there and available, fantastic. I've had quite a few clients take advantage of money that they've got invested in their 401k. So what's nice about the 401k is that we can take a loan out against your retirement. It doesn't hit you when it comes to your debt to income ratio for us in qualifying you. And you're paying yourself back with interest. So it's kind of a win-win. And it's an opportunity for you to be able to capitalize on really low interest rates, which are right now in the mid 3% range for a 30-year fixed and the high 2s for a 15-year. So like I said, I've been doing this for a while. These are super, super low rates. So it's a great time to take advantage of them. And then also for cash, you can use gift funds. So if you've got family member, mom, dad, grandma, and grandpa who want to help out, you can always use gift funds for down payment. And that goes for government loans and conventional loans. Any questions on the cash stuff, Jennifer? I mean, it's pretty straightforward.
I think all of that makes sense. I think that when I talk to first-time home buyers, a lot of them, don't even understand that they do, that a lot of programs do in fact require some down payment. at all, and they don't understand all of the different options that are available, in terms of down payment assistance programs, gifts, doing things, creative, for example, like, borrowing from their 401k. So that's all really great information, especially for a first time home buyer.
Yeah. Well, good. And I think the takeaway here too is it all starts with a conversation. We do this every day. This is kind of our normal routine. Most folks buy 3 or 4 homes in their lifetime, if
Right.
that. And so this is all brand new, and oftentimes it's scary. And so, our hope today is that we kind of demystify it. It doesn't have to be scary. And the fact that you apply and don't buy a home doesn't mean that your credit's going to be impacted negatively, that you've been denied. It's not a bad thing. It's just a matter of knowing where you stand and if it makes sense for you to take advantage of the market today.
Got it.
So, you brought up a good point. There are some down payment assistance programs available that we can take advantage of. I still really encourage my clients to save at least $3,000 to $5,000, because even if we get the down payment assistance program, and even if you're able to negotiate with the seller to cover a portion of those closing costs, there are still going to be out-of-pocket expenses. There are inspections, there are appraisals, things like that, and that costs money. And that money moves fast, so it's important that you have a little bit of savings to get started.
Right.
So that covers the down payment portion. Credit scores. So credit scores are really important. We do what's called a tri-merge credit pool, and that is a combination of the 3 most probably popular, most important credit bureaus, which are going to be Experian, Equifax, and TransUnion.
Right.
So what we do is when we look at those tri-merge, we look at all 3 of those scores, and those range, on the low end at like 400 to 450, all the way up to 850. We throw out the high score and we throw out the low score, and we use the middle score for qualifying. So ideally, we want your scores up above 620, ideally. And then at credit scores of 660 and 680, we're starting to open up more options when it comes to down payment assistance programs.
Okay.
One of the nice things that we have available at Movement Mortgage is something called a credit score simulator. So let's say you're ready to start the process, but maybe your credit has a little bit of, you've got a rough patch you've got to work through, or unbeknownst to you, something happened, a collection hit your account, or a late payment, shows up that you had no idea about. There are some things that we can do to help alleviate that, help improve your scores. And the simulator gives us options to pay down some of your accounts to see what it would translate into as far as a point increase. The
That's a
higher your
really
credit
great
score,
tool.
yes, yeah, it's a very cool tool. And the higher your credit score, the more loan options you have available to you, and the better your interest rate. So credit is really, really important in determining your ability to pay back the loan.
Right. Okay.
So credit would be the second component. Again, I would be able to run a tri-merge credit report for you. It is free of charge. And if you're not ready right now, we can work on ways to improve the score. And even if you are qualified, but you want to get that score up just a little bit so that you're qualified for a more favorable interest rate, we can help you get there and coach you along the way.
Okay. That sounds great.
Yeah. The last component is going to be your income, the consistency and stability of that income. And as you can imagine right now, we've got a lot more scrutiny when it comes to verifying employment. So we're going to do a couple employment verification checks throughout the process. Initially, once your offer is accepted, we'll confirm that you are working there. And it's a standard form called a VOE, verification of employment. Your employer, your HR person or payroll person would fill it out. And they would tell us, what your hourly wage is or what your salary is, the likelihood of continuance, if there's any overtime or commission, different ways that you're being paid, bonuses, et cetera. And through that, we're able to determine, how much income we can use for qualifying purposes. And then right before closing, we're going to check again. So right now, because people are furloughed, people's hours are cut, and some people are laid off, it's important that we know if we're going to be lending hundreds of thousands of dollars, that person is going to be able to make those payments.
Of course. And talk to me for a second about how the process is different if an applicant is self-employed.
Good question. So typically when we're dealing with people who are looking to buy a home, we're putting them in a couple different categories when it comes to income. If you're a W-2 earning client, you've got an employer, you are on salary or an hourly wage, it's pretty straightforward. We would just kind of average that out or just take your salary. Self-employed is a little bit more challenging. So when it comes to self-employed folks, And Freddie Mac tends to have more of an appetite for our self-employed clients. Basically, we take your earnings over the past couple of years, whether it's your a sole proprietorship or a corporation, and we average out those earnings. If you've been in business for 5 years or longer, oftentimes, and your credit scores are decent, typically above 700, we can usually get 1 year of tax returns. And the reason why that's important is being self-employed is a double-edged sword.
Right.
Years and years ago, we had more flexible programs where you had stated income loans. Those, for the most part, have gone away. There are a few private mortgage banks that do those loans, but you're going to pay a slightly higher interest rate as a result of that. In general, when we are averaging out income, we want to maximize what you're earning and taking home. At the same time, your tax preparer or your accountant may want to maximize your write-off so that you're not paying the IRS a whole lot, keeping
Right.
Uncle Sam off your back. The problem with that is it impacts your purchasing power, the ability for you to buy more home. So it's one of those things where I always encourage my clients, if they're thinking, hey, in the next year, I want to buy a home, before you file your taxes, let's take a look at what they would look like. And that way we can make some adjustments, not to manipulate your income, but you may take fewer write-offs in the year that you're trying to purchase so that you can maximize your buying power.
That completely makes sense. Okay, well, this has just been a bunch of really wonderful information. And I think that all of this helps demystify the process and put in front of, potential home buyers, a map about,
Exactly.
what first steps should be, how it would really benefit them when they're first getting this idea to, give you a call, set up a time just to even chat with you for 10 or 15 minutes so that they can begin to get themselves prepared and put themselves in the best position, so that they can meet their goal of home ownership, or of refinancing, whatever goal they have with that. You can help them get there.
That's exactly right. Yeah, and my job is to consult with them. It all starts with a conversation and
Right.
completing a loan application. It's very basic, 15 to 20 minutes. And the good thing is you really have nothing to lose. If you're not working right now and you're going to be looking for a job in the coming month, well, maybe it's not time to apply for a loan. But once you're getting settled and, once we get back to some sort of normalcy, whatever that looks like, and you're ready to take that step, I think it's going to be a tremendous opportunity with low rates, to be able to take advantage of that. And my job is to make sure we get you comfortable with that monthly payment. You're comfortable with your total out-of-pocket expense. And then, Jennifer, it's your job to help them, figure out what's most important to them in a home, the amenities, the bedrooms, bath, square footage and areas and school districts, things like that. My job is to be your money guy and to make sure you're comfortable with that payment, total out of pocket, and so forth. And then the fun part starts where you get to shop for a home.
Yay, shopping.
Exactly.
Okay, well, Antonia, thank you so much for your time today. I'll make sure that all of your contact information is available, to everybody on the video. And I will talk with you soon.
Definitely. Well, have a great rest of your day. Thanks,
Thank
Jennifer.
you too. Bye.
Bye-bye.